in the national capital, and with me, two key budget makers, and always a pleasure, Finance Secretary Dr. TV Somanathan, welcome to our studios, and Disinvestment Secretary Tuhin, Kanta, Pandey. The big macro question to you to start with, and that's really what we have picked up through the day, and I'm trying to sort of capture it for you. The question that is being asked, that given the overall macro environment, especially what's happening globally, how certain are you, sir, about the nominal growth number that's been pegged in at 10.5%? And if you could sort of expand on your own expectations with regard to the GDP number that you are working with.
Yeah. So I think the figure of 10.5 is a reasonable and, if anything, slightly conservative estimate of nominal growth. I say this for a variety of reasons. Firstly, I think whether it's the International Monetary Fund or the Economic Survey, real economic growth is expected to be above 6% next year. 6.5 in the Economic Survey, 6.1 according to the IMF, certainly in the range of 6 to 7%. So then for us, the nominal growth is what matters. It's a question of real plus inflation. If you take a combination of 6% real and 4.5% inflation, you're at 10.5. If you take 6.5% real and 4% inflation, you're at 10.5. So my long, exposure to the Indian economy, I have not found India to be a country where sub 4.5% growth happens very often or very over a sustained period of time. So unless we have extremely low inflation, I think we will reach 10.5% nominal growth. And I think the real growth is quite robust to remain in the range of 6%. So I think 6 plus 4.5, 6.5 plus 4 are the ranges within which I think it's most likely to evolve. And I'm therefore quite, and we have taken a very conservative buoyancy assumption of 1 in our revenue estimates. So there are several variables there. If you take the combination of them, I'm pretty confident that we will be within our 10.5% revenue growth estimates.
Dr. Somanathan, we've been running with a headline, a fine balancing act. I would also like to add what's happened several times over the past few years, under promise and over deliver. I think that's the story of the broader GDP numbers. One key point before I bring in the Disinvestment Secretary, and this is the downside. In two previous budgets, we have seen external shocks.
Yes.
Nothing in your control. And that translated into a food and fertilizer subsidy shock, if I may use that word.
Yes, absolutely correct.
Is that kind of a downside still possible, or is the horizon much more clearer?
Well, I mean, if you had asked me 12 months ago whether something would happen in Ukraine, I would not even have known. I mean, I wouldn't have expected anything to happen. And if you had asked me 36 months ago whether there would be lockdowns, I would not have heard of the word lockdown. So those kinds of events happening repeatedly is unusual. I think I am hoping that there is some kind of reversion to the mean of extreme events and that we are free of extreme events for the next 2 years. So I cannot, obviously, we can't estimate for very extreme events. And if they happen, then they happen. But last year, in spite of extreme events, we have ended with a fiscal deficit, or we are planning to end with a fiscal deficit of 6.4%. So we have actually done a lot of taken a lot of difficult steps to keep it at 6.4% despite these shocks. Now, in the coming year, I think barring something large, exogenous and unforeseen, we are fairly confident that we will reach our fiscal deficit targets and that we'll be able to fulfill the expenditure plans.
So very quickly, when you said extremely low inflation and you were only talking about a likelihood, what would that number be?
I mean, if inflation were 1%, 2%,
okay.
3%.
I don't think that's happening anytime.
No, so if it's even at 4%, I think we'll be at 10.5% revenue growth.
Okay.
So, I think I'm not seeing that as a major, likelihood. But then the other thing, if inflation were to be lower, let's say at 4, 3.5, 3, that is usually going to happen because of some favorable commodity price shock. India is the kind of country where if you have that kind of shock, growth will go up. So then the real growth will be higher. So I think we'll still get to a nominal growth of 10.5%.
And we have Ural crude, Russian crude oil also in the mix.
Yes.
Sir, I remember trying to understand from you the broader strategy on disinvestment, and I must tell our viewers some time back, much before the budget making exercise, you told us not to be obsessed with either the receipts number or what will be disinvested, and the broader point that you made, perhaps after almost 3 decades of attempts at disinvestment, various is we need to view it differently. You also spoke about how dividend receipts were part of disinvestment. Explain the broader philosophy and not just the number that's been pegged at 61,000 crore.
See, the DIPAM it deals with 3 major issues. The disinvestment, which is generally being talked about. The second important thing is dividend, which also means that, you know, we have large CPSCs, large sector, which is, you know, commercial, which is productive, and which generates profits. And when we get the dividend, it is called government savings. You are, you know, government is in control and you get the saving. Of course, money also goes, dividend also goes to the minority shareholders in listed companies. And third important thing is the capex of the CPSCs. Now this 10 lakh crores which is talked about, this is only a government capex. We have not yet counted another about 4 lakh crore of capex which will emanate from CPSCs through their internal and extra budgetary resources. And that's a very important way of, again, bringing that kind of, you know, whole lot of other advantages of capex also into the system. So therefore, I think what's important is to have a holistic strategy and not really looking at only one single line number, only to fill the budget. We must also see what is the bandwidth available to us, which is of course reducing in terms of, you know, 4 lakh crore, which has been raised over a period of time. Then you have market to look after, you know, the markets, how they behave, you know, and obviously they really, you have to wait because the valuations get impacted. The third is, of course, the minority shareholders, which is a very important when you are doing market sales. You can't do it any price, any time, any discount, because you have to keep in mind that there are other shareholders whose interests might be impacted. And the fourth is the process when it involves in case of privatization, where the management control is passed on. And that process is a publicly transparent, competitive bidding process of discovering the share price, because you are handing over the management control. And that is also beset with other obstacles like, you know, you could have a court cases, you could have demerger processes and so on.
Lack of clarity even on land titles, for example.
Yes, I mean, you know, so all those, so from our experience, because actually we have not only attempted but also actually delivered such transactions, we have a fair idea about, you know, it takes time for the kind of complete privatization to take place.
Is there anything in
taking into consideration overall, if you really look at it, you know, our combined dividend and dividend from CPSCs and disinvestment, we're talking of roughly about a 1 lakh crore. We also talked about a 1 lakh crore in this year, where we have already done about 68,000 crore, and we have some 2 months to go, and we'll try and attempt, you know, whether we can reach there. On dividend, we have exceeded, you know, the last year, I mean, the dividend target was 46,000 crore. We ended up at 59,000 crore. So this is a, you know, you have to keep in mind that, you know, we are estimating for 12 months.
Even though the stock of public enterprises is declining as they privatize.
Which is precisely my point.
So dividends are going up, though the stock of enterprises is going down.
I'm glad you stepped in, because if you could just take a minute to explain this point, because I very distinctly remember you saying that, you know, how much is there to disinvest in that sense, and that pipeline, there have been some attempts you have made, but they got stuck for various reasons. Just explain that to our viewers.
No, the pipeline is that we have got certain ongoing transaction, and what we want is they should be taken to the logical culmination. There are certain things on advanced side, there are certain things on the, I'm talking of the privatization where the management control is to be passed on. Then there are other transactions, for example, listing, when you have to list, for example, LIC IPO to be listed or any other companies to be listed. That's another kind of an exercise. And then there is an offer for sale where you go and, you know, dilute your stock further. And I said that I would call it actually BMMP, where B is the bandwidth, VOC, M for the market, M for the minority shareholders, and P for the process.
BMMP, viewers. Okay, that's a new term that's been added to the lexicon. Any big ticket items that we can expect from your portfolio in the next financial year?
We have ongoing shareholder, we keep ongoing transactions which are there. We have got, for example, the Shipping Corporation of India is there, BEML is there, we have HLL Life Care. These are at different advanced stages of thing. We have IDBI Bank, we have the NMDC Steel recently. So there are several transactions which is ongoing, cleared by the cabinet. And of course, let me say that, normally it takes about a year's time before you bring in an EOI and do completely think, because it's a very long due diligence process which the bidders would actually ask, because when they're taking management control, they want to actually learn about that company with a tooth comb, and they do go through the virtual data room and so on. And our process is actually benchmarked to the world's best.
Okay.
So, I mean, it's completely off board, and, there's no collusive bidding possible. There is anonymity, there is a level playing field, transaction advisors are involved, we don't directly deal with them. Everything is transparently given to them. So I think,
and you also made course correction when there was requirement. One of the lists, analytical reports going around prior to the budget was a list of almost 4 dozen odd companies, which perhaps you are aware of, which the market at least feels are ripe for some sort of disinvestment. I'm coming back to you, sir. The central government, and of course the states, but we are discussing the central government today, continues to shoulder the burden of growth. That's clear through the CAPEX strategy. Detail out the CAPEX strategy in terms of this significant rise. Where do you see it happening? And the second quick point, in terms of private sector also following, has there been a change from when we last spoke, sir?
Okay. So first, your first question on where is this extra money going, if I can interpret it that way.
Yes, sir.
Mainly into 4 places. One, additional money for roads and highways. Second, and the biggest, is additional money for railways. The third is additional money for state capital expenditure, 30,000 crores over last year.
I thought you will add a third R and make it triple R.
I could make it Rajya Sarkar.
Rajya Sarkar.
That will be third
and
R.
thank God we don't have the global R of recession to add in the Indian context.
The fourth is that we are doing some much needed greening investments in the petroleum sector. This is particularly retrofitting of refineries to be emission free, and we will also be part of that capital expenditure will also go into augmenting our strategic petroleum reserve. So it's for energy security and clean energy. So that's the fourth big piece. The rest are incremental increases in various central
ongoing.
Yes.
In the immediate aftermath of the budget, this petroleum-related capex figure, there was a bit of sort of lack of clarity, at least, whether this reflected possible subsidy support. That's not the case. But what happens if the central government has to step in again in the next financial year? Because petroleum diesel prices are not changing. And I think that's a political decision, but I'm still taking that question to you.
Let me put it this way. I don't think after what we have been through last year, I think it's unlikely that we will see anything of that magnitude as adverse events in the oil and gas market. But if it does come, we'll have to deal with it.
Okay, and that would...
But we do not envisage giving subsidies to oil companies on a recurrent basis. No.
You do not envisage that?
No. We do not, nor do we, at least I'm speaking for myself here, as an officer in the finance ministry, we do not think it is appropriate to start subsidizing fuel. I think fuel prices, we have subsidies for food, we have subsidies for fertilizer, but we don't want to see subsidies for petrol and diesel.
When will that end then, sir? The current...
At the moment, there are no subsidies on petrol.
But there is a freeze on the companies from passing on.
But the companies are not necessarily making losses right now.
That's a very, very important clarification. As I wind down this conversation, because viewers...
They were making losses at one point.
Yes, they were. And that's
we did give them some subsidy support through an infusion of 22,000 crores during this year. But it is not my impression that they are currently running further losses.
And we, of course, have also had a strategic shift in terms of our crude oil purchases. Viewers, this conversation could have gone on much, much longer. But as I wind down this, because both secretaries here have to, our budget makers, head on to other conversations, I just want a quick comment from you, sir, in terms of for the Aam Aadmi, inflation, what do you see happening? Because it's been a concern, and I don't want to talk about the tax part of it. We'll have that conversation with the Revenue Secretary. But inflation dynamic, how does it play out in the months ahead?
So I think inflation has come down quite a lot in the last few months, and I'll be a little guarded in my comments on inflation because the current national institutional architecture on inflation is that it is primarily the RBI's mandate and we play a supporting role. So we have played that supporting role wherever it has been necessary, whether in terms of duty changes on items of common consumption, whether it's in terms of releasing stocks from the government's food grain stocks. So we will continue to play the supporting role.
Well, these are the two budget makers among all the other budget makers who we hope to bring to you viewers once again on the 6th of February. Like last year, Finance Minister Nirmala Sitharaman and the budget making team will be at the India Today, Business Today post-budget conclave. I hope to see both of you again then. Dr. Somanathan and Mr. Pandey, thank you very much for your time with us today. With that, it's a wrap on this conversation. If you've been, thank you very much for watching. We'll be back with more. Do stay